Hey, what's up, everyone? This is Sylvester, founder of FX Lifestyle, TradeYourFuture.com. In this video, we're going to be going over trend lines and support and resistance, also known as supply and demand zones. So let's get to it. It's going to open up our chart here real quick. Go to trading. I use TradingView.com to do my analysis, and I use my MT4 MetaTrader 4 app to place my trades on my phone. So we're going to open up our chart here. All right, first chart we got Euro USD. All right, so I'm not going to get into basics with trend lines. You could find some basic information all over the internet on trend lines, how they work. You could also go right on the website, TradeYourFuture.com, go right into courses and go into my intermediate course where I go over them a little bit and show a couple illustrations. What I want to get into is on how I start off with my strategy. And the first things I start off with is trend lines and support and resistance, supply and demand zones. When I open up my chart, I'm going to have my moving averages and indicators, but here I want to kind of start from the get-go. So kind of just elevate this as we go to make this easier for you guys to grasp. So first thing I do is I start off with the daily chart. I open up my chart, open up my currency pair. We'll just stick to Euro USD since that's up. And we're going to start with the daily chart. And the first thing I'm going to do is I'm going to identify my support and resistance zones and my trend lines. I have the 200 EMA open, and I don't have my other moving averages open at the moment because I don't want to confuse people and I don't want to kind of just complicate it. So I just want to kind of dissect my strategy down and then work it up from there. So actually I'm going to exit this out, and for anyone new that doesn't know how to use TradingView or how this works just yet, what you're going to do to apply a indicator on your chart, you're going to click indicators up here. We're going to be applying the 200 EMA. So you're going to type in exponential before you even actually finish typing. You'll see it pop up on their built-ins. So you have your moving average exponential. You're going to click that once, and we're going to click X. You can see it printed up a nice line here for us. That's our moving average. And what you're going to do is come up here. You could do it two ways. You could right click it if you like and go right into settings, or you can actually go right up here on top of this screen, click the little wrench button to format, and we're going to adjust the settings on here. So we're going to go to inputs, type in 200. I'm going to go back to style. Now I like my moving average to be purple. You can have it any color you like, and I make it a little bit thicker so it's easier to see as well. And then we're going to click OK. And there's our 200 EMA. Now the way we use the 200 EMA is just to show us the overall trend that the market is in. And the overall trend, no matter which time frame we're in, whether it's daily, 4 hour, 1 hour, the 200 EMA will display that to us. And the way it does is when price is above the 200 EMA, it's going to signal that we are in a bullish market. When price is under the 200 EMA, it will signal that we are in a bearish market. So we use that to identify the overall trend that we are in, and whether we're going to be looking for short positions if it's under the 200 EMA, or we're going to be looking for long positions if it's above the 200 EMA. So first thing I do is I like to draw my trend lines just to kind of identify if I am in a bullish market, bearish market. I like to use either the manual trend line or the ray. So the way I would start off is with the ray. So we're going to take our low point, put it up here to second. Now you can see that price respected this point here, and then respected this point here again before it shot up. Now in this case we're using the ray because we can use it for future. As you can see here in real time where we are right now with price, you can see that price actually somewhat respected this point here, kind of danced around it, was retesting it here, retesting it there, up, and now we're back down here again. And for whoever does follow me, you'll definitely know where this trend line came from. as I always post my analysis in the Telegram group. So the reason we draw it with the ray is because we want it to go into the future. Because when we would have drawn this here in real time, we wouldn't have known when or if it ever actually gets touched, but eventually it always does. And this was starting, back in 2017, like March, April, and coming down to 2018. So, this is a year later. But you draw it out into the future because it'll definitely help give you extra confirmation later on whether this trend line is being retested again or being validated. The next trend line I would have drawn at this point here, as you can see, we got a high up here, right down to this high. So you can see prices constantly making from the high here to lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and then it hit this point here. And from here, the main thing we're going to look for is we could see price just made a slightly higher high than this high here. And then at this point here, it made a higher low, and then higher high and higher low. So we draw the trend lines to kind of help us identify that. And that's just raw market movement. So you should be able to identify, whether you are in a bullish or lower or a bearish market just by identifying your lower highs, your higher highs, and lower lows, and higher lows. So I'll draw my trend lines. We're going to try to predict this movement here. I'm going to take out our array. There you go, boom. So you got a nice touch there. See price going up. Got it right there. So we're just going to start from this point here, actually. So I would have had my trend line drawn here. I would have had my trend line drawn from up here because I could see that was a resistance zone. You could see price is respecting these levels. And generally what you will see, if you start seeing long wicks up near or like near a support or resistance trend line level, it's going to be signaling rejection. And then you can look for your candlestick patterns or market formations to show you if price is actually going to be respecting these levels. So you can see rejection here, price is rejecting down here as well. And at this point, we're going to move on to support and resistance. So this would have been, so forget this part here. Forget that that's like not even there. Let's actually do the replay. This might actually help us a little bit more. So let's do replay. Let's cut it off like right to here. All right, let's going to pretend none of this happened yet. This is where we are. So I have my trend line drawn from up here because I could see prices respecting it. Okay, now regarding support and resistance, quick notes if you want to take out a notepad, take some notes. The demand zone is your support because you'll see these get thrown around. I mean, we can keep it basic and just call it support and resistance. But your demand and supply zone is a little bit different because typically your support and resistance zones, people draw them out using horizontal lines. And I don't necessarily like to do that all the time. I prefer to use supply and demand zones because what they actually do is you take the wicks, the length of the wicks for the width of your rectangles, and then you draw them out that way. And that shows you an area of support and resistance. Keyword area. Price isn't going to perfectly every single time hit a certain price level and be rejected off of it or bounced off of it. So I like to draw these zones because when price is near them, that's where I know that within that area I can look for certain candlestick patterns or market patterns to form when it is being respected. So our demand zones equals support, our supply zone equals resistance. All right. So the next thing that I would do is I grab my rectangle, and for instance, I probably would have drawn it out from this point here. You could see price came down to this point, broke through it, came up, retested it, came up, came back down, retested it, came back down, went up, came back down, came up, kind of went around this area here again, came back up. So it's a point where you can see it's being multiple, it's got multiple touches. And sometimes you got to zoom in. In this area, it would have seemed like kind of sloppy. But if you zoom in and you really pay attention to these candles, you could see that price broke through, came up. This red candle came back down to retest the zone, came back up. It was rejected here off the 200 EMA. Price came back down, went up to retest, and then came back down, and then came back up, and so on and so forth. And you're going to see that in your candles, and you just got to be able to know how to read them and just understand how the market moves, and be able to find these areas of support and resistance, your supply and demand zones. And that's going to come with time. You're going to train your eye, and the best thing that you can do is back test as much as you can, so you can point these out on your own. Because watching me doing it may seem like it's easy, and then when it comes down to you doing it yourself, you start getting caught up, or you're doing the wrong thing, or you're doing it the wrong way, or you just can't see these levels like I do. And that just comes with time. Like anything, you have to put your time into something, and then practice makes perfect. So the next zone that I would have drawn is this point here. And before I get ahead of myself, the way I draw these guys is I draw it from the bottom of the wick to right where the body starts, to the top of the wick. So I'm just drawing the length of the wicks for the support and resistance. And the reason I drew this one here is I can see this is where price found support. I could see it retested at this point here, it broke through it, came back up, retested, came back up, respecting here the 200 EMA, and then came back down. So we're going to be drawing our trend lines and our support and resistance as we go. Next point I'm going to draw here, because this is where price found some support. Now if we go back, at this point here, we could see price was respecting this level around here as well. I try not to draw these big wicks here because they're usually either news driven or stop loss hunts, and I don't necessarily consider them a valid support and resistance point. But from this point here, I don't try to go back too far. You always want to try to keep your analysis relevant to not too far from like real time. You don't really want to be going back way back here and looking for your support and resistance, because I mean, we're talking, you're going back to 2015, 2016. You know, the past doesn't always predict the future, and we don't need to go years back into price action to try to figure out what's going to be happening now. You want to keep it relevant. Well, you could see, like from this point here, price was actually respected right over here. So you could draw it from back here. You could have already had this drawn out into the future, but we're just going to try to keep it relevant with this point here. So you could see we had it drawn here. We had a nice long wick rejection from this point here. Price came up right on this area, came up here again. And this is your confluence. This is where it gets interesting. This is where you're going to start getting these really good entries. This is where you're going to be placing your entries, not just off of price coming up to a resisting trend line like it did here. You're going to have your previous support, which is now resistance, which again, let me write this down. Put this down in your notes. You may already know this, some pretty basic stuff, but for anyone new, keep in mind that previous support becomes future resistance, and previous resistance becomes future support. And where you will see that is in this example right here. This was a support level for price coming all the way from back here. When price broke through it, it came back up to retest it, and now it acted as a resistance level, and then price came back down. It came back up here again to somewhat retest this level. Even though it didn't touch it, just keep in mind the market is not perfect. and you can't expect it to do something or touch a certain price level exactly to that point. But you could see it somewhat came up around this area, which actually, if I drew it all the way from over here, you could see that wick actually touched it because this wick came down lower than this one. But I try to keep it relevant, so we'll just keep it there. But then we could see price came back up here again. Now when price came up here again, I got a confluence of a previous support that's now resistance. I have a resisting trend line that I had drawn from up here right into here, and it's right in my 200 EMA. Where it did break above it, I have a long wick rejection from my trend line and my now resistance zone, which, let me make this this rectangle red now as resistance. So my confirmation here, just off of trend line and resistance zone, is that price is right on the resisting trend line, price is right in the resistance zone. I have my 200 EMA. So my confirmation would have been this candlestick right here. I would have waited for it to close. See that? That is your perfect entry right there. And you're not always going to get perfect entries, but I mean perfect in the sense that you waited for the right moment. This is your sniper mentality. This is price waiting to come to you. You could have been placing trades down here. You wouldn't have really placed it down here. I mean, this could have been your support zone right over here. If you drew it out from here and you saw price down to this point, but you wouldn't have known about this trend line just yet. But coming up here, you have a validated trend line. You've seen it touched here previously and previously resisted. You've seen it go align with your 200 EMA. You've seen it come up to a resistance zone that was previous support. And now you have a bearish engulfing candle, a long wick rejection, and price coming right back closing under the 200 EMA. You place your entry here or anywhere here. If we look back, we're actually right around the 1.08, which is a nice psychological level. If you ever heard of quarters theory, which I don't really use too much, but I do look at these nice even numbers as a major area to watch for reversals or continuations, or just areas to watch for as like major support resistance basically. But right around this price level, if you shorted that off of just those confirmations there, and you brought it down to your next support, which would have been around this area, as you can see we have it drawn out. But let's say you even take it down to this point here, just to be safe, protect your profits, you're looking at 130 pips. 130 pips in one trade, which is all you need. If you can do that weekly, you can make a lot of money. So don't feel like you need to overtrade, and actually try not to do that. The main mistake that you make and that I have made previously is the need to feel that I need to always be trading, always be placing trades, and that's not the case. Quality over quantity. What you want to do is have that sniper mentality. Draw out your charts like we just did right now. Have your analysis set. Know what market you're in and wait for price to come to you. And if you waited for this point here, boom, you got a nice trade, 130 pips, which is on one position. And as any of you guys have followed me previously before these courses came out, I open up multiple positions when I have multiple confirmations, and that could have been an easy 5, 6, 700 pips for me. But moving on, let's click play here. So that was just like one example there. There could have been multiple there, but I don't want to make this video too long. I kind of want to just get right down to how I do what I do. Let's delete that because we don't know about that trend line yet. So we could see price came down here, created another new high. So we could see that it also broke that 200 EMA when it created this new high. And this is where we could be looking for a trend reversal because it also broke our trend line. And as you could see, key point here to watch now for the market going the other way is, since we already have our support and resistance drawn out, now this is going to be, this became our new support. See how that happened? And now this became our resistance. Look at that, priced just perfectly. So when it bounced off of here and created another higher low, this would have been an indication for you to either look for buys here or just be looking for a trend reversal, where you're basically looking, when price comes up to this point again here where you might be looking for another short, is to know that price might actually break this trend line. your confirmation was a higher low that the price was creating, and it broke the 200 EMA. It came up to this point here, and it broke this previous resistance, and which now is your future support. So you could see price actually went up to this point here, which was resistance, came back down, and now this was our support. This is our validation here that this is holding up. Now price is going to be somewhat probably ranging in between these two now. So let's click play again. Now what we look for before I actually do that is when you see price break this trend line, you always look for the safest entry. You always look for a retest of this trend line. So me personally trading this right now, I would be waiting for this price to come back down to touch this trend line again. Now it doesn't always do so, doesn't always retest and go up. There is times it will break out and shoot way up, but I would be looking for a retest of this trend line and a candlestick confirmation along with other confluence for it to go back up. Now you can kind of see this is forming a little double top here, so it might actually do that, come back down here to retest maybe even this 200 EMA along with the trend line and shoot up. So see how like confluence comes into play. So let's click play real quick and see what happens. So price actually respected this support. Like you could see this big candle came up here, even broke this resistance, came back down, came back down. So here it was trapping some buyers. Some buyers are like, oh, trend is changing, let me place my buys, and price came right back down, took him out. Came back here, and now it shot up. Look at that. Boom. Price went way up. Look at that. Wow. So now price didn't come down and retest this trend line exactly, but it came down to retest the support zone, and it's right near the 200 EMA. So when it comes down to these retests, they don't necessarily always have to be on the trend line. They could be near a support zone of the trend line, or they could be even on this 200 EMA. And they don't necessarily always have to touch. In your confirmation here, what you could have had is this big bullish engulfing candle. You saw doji come up. Whenever you see dojis near support resistance trend lines, long wicks, it calls for indecision, and that's where you're going to be looking to see what that next candle comes up like and how strong it is, which can signal you for another buy position or short position. Well, let's just keep playing this out. We're going to watch as we go. I just kind of want you guys to be able to see how these zones are being respected in the future as I'm playing this. See, it came up when it broke it, retested it, and just went right back up. In this case, I see price doing that. I could have already had this drawn out before, but let's look for a nice resistance zone. This top of the wick here. I mean, if we want to keep it relevant, we could take it from here. See that? Price actually touched it. That could have been your next one. Right from this high. I mean, if you want to take it all the way back down to here, like this part here looks like a nice one as well. Because I can see price rejected here, came up, came down, came up again, came down. You can see it's being really nice rejected. So this could be another resistance zone. So let's draw that up here since price is actually moving up there. Let's draw the next one from this week here. I kind of like this a little bit better. This actually matches up real nice with this part here. Let's draw that red. And we draw these out into the future. And as you can see, when price was respecting them here, it still respects it later on in the future. So let's click play and let's see how price works out. So you can see price came up to this point, came down, came to retest it. Boom, came right back down. Long wick rejection of the support. Came up to resistance again and coming back down. Looks like it could be forming a double top. Nope, came right above it. Retested it. This is our support zone now. Long wick rejection. Came right back down. This stayed as a resistance zone. Came back up, retest. Long wick rejection. Price is coming down. Look at that. Got a nice head and shoulder pattern. You see the shoulder, see the head, shoulder, right near the resistance zone. And this is where we look for our market patterns. Price broke the neckline, came up, retested it, came right back down. Boom. So you get multiple entries, and support and resistance will be very important for you because it'll kind of simplify everything for you and how price moves. It's when you're looking at the chart, sometimes you might feel like, I don't know where price is going. I don't know. You know, there's so much chaos sometimes that goes on, and it's just like simplifies things. So let's click play again and let's see just how price moves through here. We're actually going to just speed it up a little bit, so make it a little bit quicker. You could even see when price broke through here, it came down and respected this zone and then came up above it, came down to retest, went above it. You know, you couldn't necessarily maybe predict this whole entire move going up unless maybe you were looking at a longer time frame, where like from we're on the daily, we could have went to the weekly and seen something like this to predict it. But as you're going, you can mark these support and resistance levels for the future for yourself so you can see where price is respecting them. Now in this case, let's just pause it real quick, because before any of this would have happened already, we would have had our trend line drawn out. So from this point, we would have drawn it to this point here, and we're following a trend line. Let's click play again. There we go. All right. So now let's just dissect this as it went down. So what we have here is, we didn't see this earlier, but I'm just going to dissect it as it goes. Because keep in mind, all this we could have already had beforehand. I just skipped way ahead of time. This is months of data right here. So let's grab our ellipse tool. Okay. So we had it break out through here. We saw this as a support zone. We saw the nice double bottom. We saw price go up, and it's respecting these points. Now you never want to, you always want to buy low and sell high. I'm sure you guys heard this before. Buy low and sell high. You don't want to be buying up here because this price is moving up. In this case, yeah, it's going to happen at times where you're going to buy as price is moving up and it's still going to go up in your favor. But more times than not, you're going to just trap yourself because price at some point here is going to consolidate or form a market pattern before going up. In this case, what we could see with our trend lines, and this is what I would call your minor trend line within the daily. You draw it from this point to this point, and you could see a nice bullish flag. So you see price went up, it's consolidated here, slight correction. That's your bullish flag pattern right there. Price is going back and forth in between. You could see the little breakout. Price came down to retest. This is in conjunction right with our trend line, and price shot back up. And it shot up and it came back down. This would be our support zone, which was previous resistance that it broke through. You see price came down, retested it, shot back up, came down, retest. You could have multiple retests and then went back up again. You could see it got rejected here on this resistance, came down, but then it just overcame it, came down. Look at that wick, just touched that resistance zone, came up. Now as you're drawing your trend line, you could see price formed another bullish flag. Let's draw this a little bit better. Boom. Because see, we got a point touching here, point here, right through the body, touching the body. So you see price consolidated, went up, came back down, came up, and then shot up again. Now at this point here, we see price isn't shooting up as much anymore. We see some slight exhaustion because as we came over here, we didn't see so many long wicks as we saw up here. So now we got some long wicks. So We're going to continue doing our support and resistance zones. We're going to take this one here and draw this as our next support, because we saw price came down to here, respected it. These we would have had drawn out already. Before this would have happened. So we were just predicting this whole move, how it went, and we're trading with the trend. We're in a bullish market, we're placing buys, and we have multiple confluence in certain areas. Now we had this trend line drawn out. Right through here, it touched that point and respected it. So this could have been one of the better entries we could have had going with the market. We're coming back up. You can see it's respecting all these levels. Now we have a break of the trend line. Now this is where we're going to be looking for another great entry on a retest. So let's see what price does. So this is a break. Don't get too ahead of yourself. Don't start shorting because you broke at a trend line. Price might do a fake breakout, or it might not actually go to the downside. So let's press play and let's see what happens. So you can see price is respecting that support zone, bounced off of it, came right back up again. Now you can see on a minor level, we have a little resistance zone right there as well. You can see price was respecting it around this area when it came down. Now it's respecting it here again, come back down, and now it's ranging, and now boom, now it just went way down. And you can see once it's getting to these points, price is literally coming in within them and testing and resisting them and testing and resisting them. At this point here, I see that price is making a lower highs. So I'm going to be drawing my trend line right there and watching for these levels to be respected. Now I have to do a little different color. You can't see that too well. Let's bring to front. That's all right. You can see the price is respecting this trend line here. Look at that. So we had price respect trend line here, came down, came in between these two, came back up again, and it broke this minor counter trend line and came down to retest the support zone along with our trend line, shot back up, broke through this resistance, came down to retest. Now let's see what's going to keep happening. So it respected this resistance zone, came down again, came back up, came down. Now what you could have seen here at this point, if you have a left shoulder, right shoulder, neckline, retested that neckline. Look at that. Main head, shoulder, shoulder, broke through, came to retest the broken neckline, price shot up. So you look for these market patterns near your trend lines, near your support and resistance, and that with extra confluence of these support and resistance, supply, demand zones, and trend lines will give you accurate trades, will give you good confirmations and more probability of having winning trades. Now at this point, as I would have seen this form, I would have grabbed my ray again, take it from this point to this point. Again, because price is still in a bullish market, even though it might have seemed, so let me pause this here real quick. So even though we had to go up here, right, and then we had price come down here, when you have these minor bullish flags on this more minor trend, on a bigger picture, you can still be in a bullish market, because being here, we have a bigger bullish flag within a bigger impulse wave. So we have our impulse wave, we have our correction, and there's our next impulse wave. So where you might have thought that this trend line break would have been turning into a bearish market, keep in mind we were still above 200 EMA. We have an additional trend line that developed here, and price ultimately hasn't even broken this trend line yet, so until then it could still be in a bullish market. But more importantly, the 200 EMA wasn't broken, so we are still bullish. And then from this formation, we would have seen a bigger bullish flag form, and you could see where price broke through it, came down, went up, inverse head and shoulders, came down to it, which would have, at this point here, we would have had this trend line broke. And look at that, your next confirmation here would have been a perfect entry to go long, because you already had all this drawn out beforehand. Your price just came right down to this neckline of the inverse head and shoulders, your major daily trend line. You're still above the 200 EMA, came down to the previous support zone, candlestick confirmation engulfing. You place your trade, you have a double bottom here as well. You could see that W, boom. You got 4 or 5 different confirmations. Now you can feel confident placing your trade and price shooting up. And you'll kind of get an eye for this, and I hope I'm explaining it the best way I can to keep it simplified for you guys. And I feel like I'm going to get better as I go when I go to teach my strategy. But hopefully you've picked up a lot on support and resistance and these trend lines from this video. Keep back testing, go back and try to redo the things that I just did and see for yourself how the market respects these levels when it comes to trend lines and support and resistance, and put them into use. And I hope it makes your trading better and you become a better, more profitable trader from using these techniques. I'll see you guys in the next video. Hope you guys have a good one.